Hi, this question about KenRe, it came about because of a video that I did, and I said what to look for before a company dips, and I highlighted around I think 9-8 points that make the stock to dip. Then this viewer came and asked, which are these companies that we should be investing in? If you look under this watch list, they are quite a number. By the way, they are very good companies in Nairobi Security Exchange. Very good ones from those fundamentally strong companies. Some of these that I'm clicking here, fundamentally strong companies. They are quite a number. You'll be spoiled for choices when you go to this Nairobi Security Exchange. And you just need to invest in 5 counters only, a maximum of 5. And if you are there and you don't know what shares to go for or to pick or what criteria to use when investing in Nairobi Security Exchange, I'm still selling my ebook. The link is in the bio. Going for 400 shillings only. How to pick profitable shares. Just pick it or buy it, and your investment journey will never be the same again. It will give you some good insights. Now, back to KenRe. There's a video that I did about KenRe. I think that was last year or late last year or early this year. I can't remember. And by that time, I was highly recommending KenRe as one of the penny stock that you can buy if you really want to go for penny stock, because it's a stable, established insurance-related company which has been there for years and has been paying dividends consistently. However, recently, investors also need to pay attention to the company's recent financial performance before buying shares. In the latest financial results that were produced dating 31st December 2025, imagine KenRe reported a decline in profits and decline in revenue. And this one was mainly caused by weaker underwriting performances and rising insurance expenses. They also talked about tougher competition in the reinsurance industry, and which resulted to reduced revenue in some African countries. So this one important thing that you need to note if you're investing in the discounter: a temporary profit decline does not automatically make the company not good, but it raises questions. And anybody who wants to invest in KenRe at the moment, they should ask themselves this question: is a decline temporary or part of a longer trend? Angalia, when they produce their financial results, maybe half year, Angalia, is the decline still there or there is improvement? After they produce their audited financial statement for this year, Angalia, are they still declining their revenues and profit, or is there improvement? And how is the management handling the challenges that we have outlined there? The weaker underwriting performance, rising insurance services expenses, and is the company still generating cash and paying dividend? Yes, KenRe imelipa dividend this year, but there is a decline in profit, because if there is a decline in profit and revenue, also the dividend also declined. If you remember, the previous year they had paid a dividend of 0.35. This year they are paying a dividend of 0.15, a decline of 0.20. That is a decline, because if the fundamentals are not good, also the dividend also being paid have to go down. Ask yourself, does the company still have strong assets and financial stability? KenRe have. But you need to approach it with a lot of, approach it cautiously, let me put that word, and monitor any future results closely, because that decline in profit and in revenue, you can imagine, decline, the revenues fell by 9.7% approximately, from 16.1 billion in 2024 to 14.5 billion in 2025. Then the net profit, it declined with a whole 26.9%. That is a huge decline. But the biggest concern was the decline of revenue in its core business. So keep watching. If you want to invest in it, at the moment, invest in it cautiously. Thank you.